The stock market crash in March 2020 took us all by surprise, and the speed of the crash was one of historic proportions, with the market declining over 30% in just about a month. This spooked a lot of investors sell their stocks at a loss because they were not prepared for this sort of volatility and selling in the market, and seeing their positions down in some cases over 50% was just too much to handle. But for those of you that stuck around and kind of weathered that storm, I'm sure you came out of it a lot more confident in investing. But one thing is for sure, we always learn something from these crashes, and we can always utilize what we learn to be better prepared for the next stock market crash whenever that does happen. Some people are expecting a second wave to hit us, which could trigger another crash. Some are expecting Q2 earnings for companies to be poor, which could start another sell-off. And some are expecting unemployment numbers to get even worse, which could be another trigger point for the stock market. Now, whatever your reasoning may be and whatever your outlook may be with the market, it doesn't hurt to be prepared. So in this video, I'm going to show you guys exactly what I am doing personally to prepare for the next stock market crash, so I can once again take advantage of the situation when it does present itself. Now, I'll tell you straight out, I pretty much followed this strategy to a T during the March 2020 crash, and I came out with some really good gains from incredible companies, so you definitely want to stick around for this video. Now guys, all I'd ask, if you find any value in this video, just drop a like down below, share this video with a friend as well to teach them more about stock market investing and how to prepare for a market crash. But either way, regardless of what your stance is on the market right now, let's get into this video, and I'm sure you're going to come out learning at least one new thing here. So this is something I've personally been doing in the last couple of months. I've realized that over the last few months, a lot of my investments have changed on a fundamental level, carnival, or simply my mindset around that business has changed for the worse. This meant that I typically don't see as much upside in every single position that I held, and as a result, I started liquidating some of my stocks. Typically, before a market crash, you're going to have a market at its all-time highs, near its all-time highs. You know, stocks are typically doing well, and as an investor who invests in individual stocks, you want to make sure that every single position that's in your portfolio is one that you can stand behind. If you feel that during the last crash you were unsure about a couple of companies and you didn't really feel like you wanted to average down or add more to those positions, that may be a sign that that stock is maybe not for you and you're better off actually closing that position. And sometimes, guys, that may mean that you take a loss on your position when you sell it, and that's completely fine because over the long term it balances itself out, and even the best investors do this from time to time. Trust me, you're better off selling now at a smaller loss if that's the case than holding it through a downturn, being something like 50% down on that position, and then just regretting every decision you've made and just wishing you sold back when the stock was only down, say, 5% or something like that. I'm sure that every single one of you went through this during the March 2020 crash. I'm sure there were stocks in your portfolio that you felt, you know what, I wish I didn't hold this, I wish I sell this off when the market was at all-time highs. And now we're getting that opportunity once again with the market pretty close to all-time highs, and a lot of stocks actually past their all-time highs. So really take some time, look at your portfolio, and if there's positions in there that you're like, I don't feel comfortable holding this through a market downturn, that's probably a sign to sell. Now, I haven't made too many trades in the last couple of months, but I'll tell you that I've closed out nearly 10 positions during this time on companies that have either changed for the worse, have poor future outlooks now, or I've just realized that during a big downturn, I do not feel comfortable holding these stocks. So this leads me to the second thing that I personally do to prepare for a possible market crash. So you know that saying, cash is king? Well, this is because during a market crash, if you have cash on hand, you have a ton of flexibility to take advantage of any sales that are out there. So think of the flip side. If you were 100% invested, you had absolutely nothing in cash, when the market does eventually take a downturn, you don't have any leeway to really take advantage of those possibly once-in-a-lifetime opportunities. The only thing you can do during that time is really hold, and over time, most likely you'll recover all of those losses. But you're not typically going to get rich from just holding during downturns. You want to typically buy heavy during downturns. So now building cash can really come from a few different sources of income. So one thing could be, of course, your main income source or your side hustles. You know, for me, any income that I receive right now is pretty much going towards the cash balance of my portfolio. I'm building up that cash buffer so that when I see deals out there, I can start deploying that cash. Now, I'm not doing this just for the sake of building cash. It's pretty much because I don't see many deals out there where I want to go in and actually spend that cash. I'd rather just hold that cash and just wait for a better opportunity, which I believe will eventually present itself. Now, it's also important to note that an emergency fund is something important to do, and this should be completely separate from your stock market portfolio and your investing portfolio. I typically keep that in like a high interest savings account, and I personally keep about a year's worth of expenses, maybe a bit too much for some people, but that's kind of what I'm comfortable doing. But just kind of evaluate your own position and evaluate your own situation. Maybe 3 to 6 months, something that's more than sufficient for you. But either way, having some sort of emergency fund is definitely important. It's not something I discuss much on the channel, but during these times of uncertainty, if the worst case scenario plays out, you can still sleep well at night knowing you still have that emergency fund to tap into if needed. Now, another way you can also build this cash position is by following the first tip, which is selling out positions you're not really comfortable holding, and of course from that you're going to get proceeds. And just continue holding that in cash until you see an investment that you want to deploy the money into. Now, personally for me, during regular economic times, I like to hold about 20% cash or so of my overall stock portfolio. But if the market continues getting overvalued and I don't really find many deals, naturally I just keep building up that cash position. And as of today, guys, I'm sitting at close to 25% in cash out of my overall portfolio worth. So any new income, like I said, is going pretty much towards my cash position. I don't really see many deals out there on stocks that I actually want to buy at these prices. And that's just kind of how I'm playing this situation. You may be a bit different. You may be comfortable with a smaller cash buffer and having more invested in the market. There's nothing wrong with that. But the idea is to have a good amount of cash, typically around 20%, so that you can take advantage of certain situations. When the crash in March 2020 hit, I had around 35% in cash. And you can see here, I was busy buying tons of stocks, making tons of trades throughout March and April, really. And by the end of this, I was left with around 10% cash in my portfolio. Now, I do want to also note that you don't want to go to the other extreme and have something like 80% in cash or 100% in cash. You still want exposure to the stock market. You still want to have some sort of equity position because there's no guarantee that there will be a crash. And if there isn't, you can still take advantage of the upside that these stocks keep providing you by going higher and higher. But on the flip side, if there is a downside, you can deploy that cash. So I personally kind of want to be in the best situation for either scenario. And I find that around 80% stocks, 20% cash is typically where I'd like to be. Okay, so now you've reduced your portfolio down to positions you're 100% confident in, and you've also simultaneously started building up that cash position, so you're pretty much ready at this point to take advantage of any sort of downturn that we may see. So now going on to the third tip, this is what I do next. So making a watch list is completely optional, but I find for me, it helps me stay organized and it helps me formulate my decisions when it comes to investing much clearer. Not every stock out there is going to be an investment for me, so I like to narrow that down, even if that means it's 50 to 100 stocks. And I like to pretty much do my research during these times when, there's not really much opportunity, but I understand the business, I understand how much money that business earns, how profitable it is, all that kind of stuff. So when eventually we do see some selling, some irrational behavior in the market, I can jump in there and I'm ready to take advantage of it because I've already done my research. Now, most brokers allow you to do something like a price alert or something, so that's typically what I do. I go through my watch list, I look at the charts, and I try to figure out what price I would be happy buying the stock at, and then I just set alerts in my broker for that. So when there is a downturn, or even if that individual stock has a particular down day for whatever reason, it'll alert me and then I can look into it and I can make that purchase decision fairly quickly. But now what I do personally is I actually take this a step further and I actually set priorities as well for my buys. So there's certain stocks that I would definitely buy first before other stocks. So for example, if both McDonald's and Uber both had, say, a 30% decline, I would first deploy my cash into McDonald's because that's a much higher priority stock for me to own. And then after that, depending on my capital, I would deploy it into Uber. Premium companies always take the priority for me because those typically are the ones that bounce back much stronger, like we've seen so far here in this recent market crash. And there are companies that I feel a lot more confident owning over the long term. And that's just me personally. Now maybe it's the opposite for you. Maybe you're looking at McDonald's and Uber is a higher priority for you because you see a lot more growth potential ahead for that company. And that's completely fine. The point here that I'm trying to make is that you want to prioritize the stocks that you want to buy, kind of sort them out from, highest priority to lowest priority. And that way, when there is deals out there, you're not left figuring out, oh, do I want to buy this first or maybe a little bit of this? No, you already had that figured out. deploy that cash, keep it simple. Trust me, when the market is down like 30% or whatever we saw in March, it's really difficult to spend that time to figure out what stocks you want to buy and start doing your research then, because at that point you probably will miss the deep discounts that these stocks offer. If you've already done your research beforehand, you can take advantage and pounce on those opportunities and really come out of these crashes much, much wealthier. So this is the last that I wanted to include, and I would argue this is actually the most important, because without the proper mental mindset, you won't be able to execute any of this. When stocks go up week after week, you're gonna hear people say, I'm a long-term investor, investing is easy, why didn't I do this before? And that's because there's no FUD in the market, there's no fear, uncertainty, doubt. Everything just keeps moving higher week after week. But as soon as you see the market take a turn for the worse, the Dow's down 1,000, 2,000 points, then these questions start popping up into investors' heads like, maybe I should take my gains right now, maybe I should sell out of my stocks, what if it keeps going lower, what if I lose more money? And that's a sign that you're not mentally prepared for a market crash. When stocks go down, human nature is to sell and just not look back at those losses. But what you should be doing typically when stocks go down is to buy into stocks. It's not natural, it's not normal for people to really do this, and that's what makes it so difficult, especially when we have such severe market crashes like in March. But if you're mentally prepared and you've really thought about this and you're like, you know what, I'm fine with my portfolio down 50%, kind of visualize what that looks like, what that feels like. So when it does eventually happen, which guys, it can happen at any point, you are 100% prepared, you have a plan, you execute on that plan, and after everything's all said and done, you will be extremely happy that you had everything in place to take advantage of that opportunity. What I believe is that you can prepare tips 1 to 3 and be 100% ready for that. But if you fail on this final tip here, which is your mental preparation, everything will fall apart and you will not come out successful. So guys, this is what I've been doing over the last couple of months here, preparing myself for another crash whenever that does happen. And guys, if we don't see that crash, that's completely fine too, because remember, 75% of my portfolio is invested in equities. Now, if we keep moving up and stocks are still extremely overvalued, then that cash position will keep growing. But eventually, I do believe we will see some opportunities, and that's when I'll start deploying that cash. Now, if you're interested in figuring out what stocks I'm personally looking to buy, what prices I'm looking to buy, valuations, all that kind of stuff, I share that with my VIP group members. So if you are interested in joining the VIP group, check out the link description down below, and I hope to see you on there on the Discord chat especially. But now, either way, guys, let me close off by saying this. Stock market crashes are typically when the most number of millionaires are made in the stock market, and that's because you get incredible companies at extremely irrationally low prices. If you're ready, if you have a plan in place, if you execute like I've laid out in this video, you will come out much wealthier, you will come out much happier, and you will come out much more successful from the next stock market crash. Now, to close off, I want to hear from you guys one lesson that you learned from the last market crash and what you're going to be doing differently in the next stock market crash. Let me know if this video taught you anything. I hope it did, because when I executed this plan here, things were a lot more clear for me and I was able to take advantage of some incredible deals. Guys, either way, remember, drop a huge like down below and subscribe if you're brand new here. Thank you so much for watching, and don't forget to invest positively, and I'll see you in the next one. Peace.